Well, hello friends. Hey, it's Jamie here with Reece Homes. I hope you're enjoying a great start to your March and staying warm in this blustery weather we're experiencing. Well, let's talk about our March update. We're going to talk to you about our normalizing market. We're going to tell you what's next in our opinion, and then talk to you about a couple of upcoming events that we have for our clients and friends of the business. So first and foremost, what we can all recognize is there is a little less market activity at this time. Right now, new listings are down by about 23 to 24%, but the interesting thing is sold listings are tracking with that. So if we compare the balance of new listings to sold listings, they're about in check, right? And the interesting thing is that we actually are seeing an increase in buyer activity through pending listings that are only down about 10%. So if you think about the idea that new listings are down by about 24% and pending listings are only down 10%, that 15% difference actually is indicating for us that we're going to have a more brisk market in the near future unless new listings increase substantially, which seasonally they're always going to increase, but I'm not sure that they're going to increase by 25%. So let's look at why this is. And the predominant reason is increase in interest rates. Certainly interest rates are more than double what they were this time last year. Presently they are 7.06%, and that tracks with about where they were in September to November of last year, when we were seeing the first signs of inflation decreasing, and people, we were at the time, there was some skepticism as to whether inflation would decrease, and that was driving those higher interest rates. And then as inflation began to decrease, and we saw that happen month over month, we were seeing those rates decline. Now, I think what we're going to see overall is a slow to moderate decline, slower and more moderate than what was previously being predicted 3 or 4 months ago. 3 to 4 months ago, they were expecting that we might get back to 5% rates here in the next 2 to 3 years. And I think right now with what we're seeing, we're probably going to be back somewhere in the 6s, maybe the high 5s over the next 2 to 3 years. But right now, ironically, what is keeping interest rates high is the strength of our economy. Those strong job growth numbers, these strong economic numbers that we're seeing right now are causing a little bit of concern in bond traders' eyes as to whether we're going to see inflation continue to decline. And as inflation declines, we're going to see interest rates decline. Now, what's next? We are going to be looking at more volume of inventory available on the market in the spring. We've got a seasonal market. It always seems that we have a bell curve of available homes, but we're also likely going to see more and more buyers come to the reality that interest rates are not going to decline in a significant way. So when they look at their needs and their wants in terms of home ownership, they're going to recognize that they just need to buy what they can in today's market and recognize that they might be able to refinance that in the future. Now, what are we going to see statistically? Statistically, we're going to likely see year over year price declines. So if you look at what homes sell for in March of 2022 versus 2023, there's going to be a decline there. Now, keep in mind, home prices, median home prices declined towards as interest rates increased, okay? Now, what we want to look at more significantly is the month-over-month price declines, because there's a lot of economists out there who have predicted and are showing that we're likely hitting the bottom of where we're at in terms of prices right now, and that month over month we're going to see median home prices increase, right? Relative to where their peaks last year, they'll still be lower, but month over month they'll be increasing. So for those who are looking for the bottom, they're not likely to see it anytime soon. It's probably in the rearview mirror unless rates go up to 7.5%, 8%, 8.5%, which really isn't predicted at this time unless inflation becomes increasing again, which again isn't expected at this time. So March conversations, very similar to much of the rest of the year. What are your real estate related plans? Are you thinking of moving up or downsizing? Are you thinking about buying your first home or maybe an investment property? Do you have questions about taxes? I know a lot of you are probably finalizing your tax returns at this time. If you've got questions on real estate and home ownership and your taxes, give us a call. We're happy to chat with you about that. Are you thinking about remodels and improvement and wondering how you can get the best return on your investment when it comes time to sell? And do you know anyone, a friend, family member, a colleague, who might have a real estate need that we can help? Of course, we'd love to be connected with them, and we'll do a great job in representing you and your referral there. Now, client appreciation events. If you haven't already had the chance to RSVP for our early Pi Day coming up on Sunday, March 12th, please do. The link is in the email here. That's going to be here in Edmonds. And then we're going to do a Getting Ready for Market Sips and Tips. That's going to be on Tuesday, March 28th at a wine bar in Everett. And again, a link for that is in the email. We hope to see you there. Thanks for watching our March update. Feel free to give us a call if you do have any questions or there's anything that we can help you with. Take care.